This interview is brought to you by Transformational Mortgage Solutions. You can check out the full episode at LykkenOnLending.com.
What I want to get into now, folks, is the Hot Topic segment, something we used to do with more regularity than we have in the last year or so, getting together with our regulars. I'm talking Alice, Andy, Allen, and Joe, and talking about trends that are going on. Already Andy has got some color on something that Allen says, and I think it's a healthy discussion. That's what I like about going to the conferences or going to these co-ops, whether it be TMC, the Mortgage Collaborative, or Lender One. It's the discussion around points and hearing people discuss, even spiritedly, things going on and how it impacts. So without further ado, we're going to get into it, and we're going to kind of go down the order that we do in the normal podcast. We're going to start about talking about the market, so we're going to start off with you, Joe, and some of the things that I want to, then we're going to go from Joe, then we're going to go to Alice, and then we're going to go Allen and Andy and Andy and Allen and Allen and Andy, because we'll get into a good discussion about all this stuff. But I've got as many questions as we do anything. But, Joe, I want to start off. One of the things I tipped everyone to do, and when we were in the first half of the program, the first segment, was to go check out the statistics of household formation. I was getting ready for my broadcast with Fox on Friday, this past Friday. I was looking at the numbers because we saw the pending home sales number come in slightly lower, and people are saying, well, rates dropped, pending home sales came in lower. What's the reason for it, and should we be worried? And I go to my fail-safe number. You know, I like JOLTS when it comes to employment, and I like household formation numbers because I think it is the best predictor of where the overall macro market is going. And that number is very strong. In fact, if I recall from looking at it, it's one of the strongest levels it's been at in some time. So, Joe, I want to start there, and then I want you to get into talking about, some of the other things that you think of interest rates. It's just shocking to me that interest rates are falling. Was that what we anticipated? So let's kick it off with you.
Household formation and the whole millennial way of life is gaining a lot of attention, and I got to believe that the millennial situation where there's less home ownership, more affordability, is going to change as they get older. It's going to be much more like what you and I grew up with.
Yep.
And so it's just going to come later on, and who knows what that next generation is going to be like. It may be that we get to add both the catch-up of the millennials and add that to another generation coming through for a very good opportunity for us. And then, from a mortgage rate perspective, it's odd that we're as low as we are. It's odd that we're going lower. It's not odd. It's episodic, right? It's a reaction to some strange things and not really normal. So once we become more normal, we're going to see rates rise again. But they're still very affordable. That's one of the nice things about what's going on today is the affordability's picked up. And, those numbers you talked about as far as pending home sales go had a lot to do with affordability, and those same numbers, same situations this month should be better simply because of the rate reduction. There's some fundamentals that will catch up and will become more normal. Things like, there are not a lot of pending home sales available. The supply, especially in the supply at the lower end, supply up and down has been bad, and that too is going to work itself out to become a more normal equilibrium between supply and demand.
Yeah, and you look at the actual home price appreciation, which is another thing that's actually, I think, coming in line, that's going to actually be more advantageous, is we're actually seeing a slowing of home price appreciation, which is going to allow it's going to at least eliminate the affordability issue that has been out there for a while, or at least tame it a bit. What's your thoughts on that? And then I want to get around to Andy, Alice, and Allen, and any other feedback they have on your thoughts.
Yeah, affordability is either the price of the house or the rate you have to pay for it, and then wages in general. And so I think all three of those aspects of affordability are pointed in a better direction.
Yeah. So, Andy, jump in, then get around to Alice and Allen. Not that you guys have to comment, but want to bring in and get your thoughts on what we talked about so far on rates and the housing market. Andy?
Well, like Joe said, this current aberration is as a result of tariff talks. And there really is a fundamental reason that's that supports the actions, at least the China tariff actions, that explain why this is happening. But it's not going to last long, I don't think. I think it'll return to normal, and the economy is doing well, but I think it's probably peaking. So I think that housing affordability will continue to be favorable. I don't think we're going to have the continued run up like we have so far. It's actually taking its toll all across the country, and even in Texas, the legislature just passed a bill that's over to the governor for signing that is going to limit the pace that counties can increase property tax rates, because Texas are now feeling what California felt 30 years ago or longer, with the rate of appreciation affecting tax consequence. So I think I think we're going to have a favorable housing for years to come.
It all seems to be lining up. Alice, your thoughts on what you're seeing, especially now that you're inside of a union home. I'd love to get your thoughts on what you're seeing on production and overall growth.
Well, I understand, both Joe and Andy, you guys make great comments to try and calm people down about the rates. But the fact remains, as a lender, we still have to react in our business to accommodate what's happening in the market today, right? So even though there's some reassurance that this doesn't make sense, it shouldn't be long term, you're still trying to go through the assessment of, well, how much of my portfolio could be running off as a result of this, and how much effort do I need to put into refis as a result of this, and so valuations really are changing by the day right now, and so are your reaction times. I'd love to get your thoughts on that, Andy. On is it lenders still have to react on a day-to-day basis? So it's really just reassurance that I don't have to sweat it out for that it's going to be like this long term. And what is long term?
And what is long term? And I think what's really interesting, Andy, I was thinking about you with lower rates. The keynote speaker at Austin Mortgage Bankers Association this Wednesday at the luncheon, and we're talking about some of this. And one of the notes I made in my talking points was, that has cost for some balance sheet adjustments, and even some warehouse lenders that are financing the MSRs. Does that mean that we could find ourselves some warehouse lenders in trouble? Andy, then Joe.
Well, it comes back to the pace of change and the basis for change. So all the other numbers are saying the economy is doing okay. It actually was doing really well. Now it may be slowing down just a tiny bit, but it's still generally upward pressure on rates. And so while we do have this aberration, I don't think it's going to last very long, and the MSR valuations are done quarterly, typically. So even though there's an inter-quarter variation, it doesn't mean that it affected the MSR. And while there may be some prepayment as a few people jump in right now, they pretty much have to do that right now. And in some of my conversations with some originators, the refi trigger isn't being pulled as quickly as it has been in the past. So I think we just need to give it another couple of weeks and kind of wait this out. I think it's going to recover. I understand Alice's point, like we have to react to while we have the pipeline bulges, we have to process it. But I just don't see it as a long-term issue.
When you say you're not seeing that as a long-term issue, you're seeing interest rates falling is not a long-term issue?
I think interest rates are not going to fall more. I think interest rates are going to hover and then go back up.
I'd love to debate that one. Joe?
Not to debate that one, but I'm a firm believer of the matching that happens, or the natural hedge that happens between production and servicing. And as Alice mentioned, the revaluation of the servicing portfolio, depending on how big it is relative to the benefits that are going to be happening on the production side, can be a good thing or a bad thing. And so, again, it's kind of nice as taking a big view of your company to know whether or not you're extremely exposed one way or the other. I know that most people are going to have hedges out on their portfolio, and so that's also going to be an important aspect of it. But the good that comes from the refinance activity can offset some of the bad that comes from the production or the value of the servicing.
Andy?
Well, first off, with the caveat that I lost money in real estate in 1982 and learned then that I'm incapable of predicting outcomes.
That's so funny. That's so funny. I lost money in real estate in Southern California, San Diego of all places. So I'm in a rare club. I'm right there with you, Andy.
Yeah, how'd you do that? So just because I think the economic indicators are showing stable to up, and although we're experiencing down, what do I know? You're not paying anything for this podcast, so the advice you're getting is worth what you're paying for. So take that with a strong grain of salt.
Yeah, Alice, you wanted to add on?
Oh, I was just going to say, I love the comments that you both gave, and I think that's reassuring because even though it is a small segment of loans that even opened up, it was interesting that you said it's hard to get borrowers to react. Maybe they're getting numb to the constant influx of everybody looking further up the funnel to get borrowers' attention. A lot of these high-tech companies have really started hammering the customer so early on, the minute they have those indicators that the customer might be on the edge of, kind of that point of financial return where it is worth pulling the trigger. And so many lenders are getting to them so early. Maybe they're getting numb if you see they're not pulling the trigger as quickly. That's interesting.
That's a great point.
Well, Alice, I love what you just said. That's, I was patiently waiting. And by the way, I lost money in real estate too. So we probably all did it very differently.
Got that same club. I was coming to you for a wrap up on this. So good jump in. Yeah, good thought.
Yeah. But Alice, you couldn't be more accurate. So outside, the market says one thing, but our borrowers are telling us something different. It's a brand new type of borrower. And yes, I may be saying, first time home buyers, but it's not actually true. We've got all those folks that are in my age bracket, which I like to say I'm in my 20s, but maybe I broke 40 at some point. But anyways, what I mean is that we're recovering from losing money and the market not working in our favor. There's so many of us. And so really what it comes down to right now is people are still trying to determine, do I rent or do I buy? Alice, we are numb. You're absolutely right. And, just going back to the TD Bank survey that I was talking about earlier, 42% of homeowners are unaware of affordability programs. And if you think back, if you were at the Digital Mortgage Conference over the last couple of years, vendors are talking about ways to help borrowers find programs. Veterans programs, are more popular and so on and so forth, right? We keep hearing about it, but ultimately we need to help better educate a new type of borrower that finally has pulled the Band-Aid off because they've healed, or that they bought their first home maybe 12 or 14 months ago, and they're ready to upgrade because they just had their first child, so forth.
Good commentary. And with that, I'm going to move on to Alice. I want to get into some of the regulatory environment, especially you sent over a link. It's going to be in our show notes. So let's start there and then go around.
So the link that I sent over that we'll share with everybody from the website is FHA has their proposed rule. At the MBA mentioned at the beginning of the show that we have comment period now open through July to be able to comment about what FHA calls their defect taxonomy. So in human speak, that essentially I would translate to how they audit, right? So when a lot of lenders have to gauge what loans are we going to accept up front, how much are we going to trust in automated underwriting approval is based on how that particular agency audits me, and, are they going to be looking for things that AUS can't catch? And FHA is very big on that. There's a lot of things AUS doesn't see. So this proposed rule to really clarify how FHA will audit is important for lenders, and that's why they've extended the deadline. So far, what I've seen, I haven't seen that there's anything we wouldn't already expect, right? You're going to get written up for fraud. You're going to get written up for inaccurate documentation. So, but it was just a segue into lenders today want to use automated underwriting and rely on it for an efficiency. And in the conventional world, we're seeing more and more confidence in that. A lot of lenders would have overlays, but as the market's been better now for 10 years, and I'm interested in you guys see a lot of lenders. Do you see companies taking more credit risk on conventional and FHA and trusting AUS decisions more empirically? So I would love everybody's thoughts on that.
I certainly am seeing that, and to the point where sometimes it gets a little more concerning, especially when I sat in the in the session where we talked about that in New York. There's a lot on this topic and talking about taxonomy, and I was Googling this and looking at this. What does this mean? How does this go about? It was really interesting. I think there's very clear, they're concerned about the FHA fund. You look at where this thing's at. I think that there's some risks being taken that are not wise. And Andy, I know you and I both consult the space. I'd love to get your thoughts on it. You consult more with banks. I know you do both, but maybe banks don't take that risk. They're a little more conservative. Your thoughts?
Well, wow, so many things to cover.
Right? We could do a whole show on that.
I know. So, and I actually felt, Alan, cringe when we said AUS doesn't work. Because technologists are going to believe that you can always make a computer do what a human can do, because that's the whole point of some of the AI stuff. But there are so many variables because there's a judgment aspect. So FHA residential lending is a little bit kind of back to some of what the commercial banks do, where there truly is a comprehensive lending assessment. So that's why you have your most seasoned underwriters do FHA underwriting, because it's not as clean, it's not as simple. There's tons of potholes and ways to slide off into the ditch. So you've got to look at it not as the computer told me I can, so I'm gonna. It's got to be, does it really fit? Does it really work? And I think that the fund's stress is partly because we've been not thoroughly evaluating all of the elements. We try to put everything in a box, and sometimes you just have to step back and look at the fundamentals of income and assets and cash reserves, and does this actually make sense? So I think we need to simplify it at the same time that it's getting more complicated, and say, are these people going to pay their mortgage? Can they really afford it?
Yeah, that's which, again, Alan, this just goes right over to you. It's such a nice layup, because you were one of the founders of LoanLogix, and that is LoanLogix, and what they do is they make decisions on this. So you weigh in on this, because you and I both are privileged, and we can't share everything that's going on there. We have insights into what they're developing, and it is very exciting. And so your thoughts on the whole, can we trust AUS?
Yeah, I mean, Alice, I didn't realize you were going to say that. I almost jumped out of my chair. And Andy, you're right. It's so funny, for 10 plus years, the technology side of the business, we've all been talking about the AUS taxonomy, right? And who codifies the taxonomy, and how can we better represent what the AUS is saying so we can react better? I've done a number of things in this area. I won't go into all of it. But one thing, when you think of the defects and you think of how do I submit a loan that's clean, it's not just about submitting it to the AUS. It's about bringing a loan in. And it's different in different channels, right? So if you're in correspondent, before you start building out your trades, you need to know that these are good files that you're bringing in. And so I did a lot of work bringing different technology systems together that we had built. But it wasn't a matter of having the best technology. It was all about how do we take these best-of-breed systems and how do we build intelligence on the front end? How do we make it where we understand is a loan not going to be defective? And then we bring that right to the light. But even better is I did a whole bunch of analytics. I started looking at gross defects and net defect rates, trying to find ways to find anomalies or to benchmark different lenders. I had hundreds of lenders that I had data, and we were looking at, all of the different categories that Fannie Mae says, and Freddie Mac, by the way, that these are the things you must check in an audit, right? And those things are always done post-close. But when you think about doing them early on, you may have a higher amount of gross defects, but you have a lesser amount of net defects because you have an action as to how to mitigate those things from automatically occurring. And you see today OCR, and you see ICR, and you see people saying that, we basically took the brains of this underwriter and we stuck them in this computer. And every time the underwriter has an afterthought, we code it to automatically do what they need. So there's a bunch of people doing those things. It's not just about doing it, though. It's about making it actionable, and it's about making sense of it. If you just run 5,000 rules and you just output a bunch of stuff, it's just a bunch of noise and it means nothing. So I could talk for hours on this. I'll pause there because I know we all have different opinions, but there's so much good stuff there. That's a great topic.
Yeah, it's a hot topic, and it's probably one that's changing. It's changing on a more rapid pace, and I'm not sure anyone has a good grasp on it. I think you probably have the best focus, having your background and what you're doing with the companies that you're consulting to and working on in this space. And I want to come to one of those exciting things, what you've recently stood up. But before we go there, Alice, and then Andy, and Joe. Let's go in that order. Al's thoughts?
Well, I think, so from everybody's looking for the technology solutions that will make them more efficient. And we could have a whole show on buy it versus build it, right? But for AUS, kind of just wrapping up that topic, we really do see on conventional that a lot of lenders out there are just, they recognize the 15 or so things AUS doesn't do. Somebody checks it and off the file goes, or even maybe that part of it is offshore checked. And they're just looking for crazy ways, and some work, and obviously you put parameters around it, but ways to just try and get more efficient and leverage that conventional. We get it. FHA is a different animal, but conventionally, do you guys feel the same way? Is that also one that, has to have a lot of high-quality human touch to it still?
Absolutely.
Aside from accurate docs, right? I've got to have accurate docs. If I have accurate docs, I have a good pay stub W-2. Am I okay?
So you say it does require a lot of human touch, Allen.
I'm sorry. I was saying that, yes, it requires a lot of human touch, but I think we can do a lot of it digitally. And the more digital we become all around, the more data we have to drive it more digitally. We can't just turn on digital and it works 100%. So I agree it requires human touch, but humans cost so much money and take so much time. We got to find a way to acquire more digitalness in our process.
I agree.
They sleep. It's all those.
And they sleep and they eat and take smoke breaks. Oh my gosh, the computer doesn't do that. Allen, is it going to be? Are we seeing a shift to offshoring? Well, we've watched offshoring be a dominant thing for now almost 10 years, continue to grow and seeing more adoption. But are you going to see offshore replaced with artificial intelligence?
The answer is yes. By the way, back RPA, right? Robotic process automation is such a big term. Back in the 90s, when I got into computers and technology, I did this, I'll say it really quick. I did this project with T-Mobile, and they had offshore hundreds and hundreds of people taking faxed cell phone applications when cell phones were just coming out, and they couldn't turn over. You'd go to the cell phone store, and you'd wait 30 minutes to an hour to hear if you're approved. And so I built technology that scraped the data off of that, and it took that same data and it did a quick approval because there was a computer system, but you had to enter it, so it simulated a person. They reduced that call center by 10, 20, 30%. I mean, eventually, I'm assuming they got rid of it. I disengaged after that point, but we use that today. So the more things we can automate, the more data we can get, yes. Offshore is always a low, expensive way, and they work usually on our nighttime, like when we're sleeping, Alice. But the best part about it is they can be the double check, or they can be the exception process before we require our best knowledge, our most expensive humans to take part in the process.
Joe, and then back to you, Andy, and then I can't wait to get in your segment, Allen. Just get more into that.
I'm going to switch topics just a little bit as it relates to automation and the fact that we've just we're going through the transition from, Fannie and Freddie to whatever's next. But one of the good things coming out of that transition is the result of, not a lot of disruption in the secondary market. In fact, I've been, surprised at how little disruption there's been at, the Freddie Mac security PC going away and everything being Fannie Mae or the UMBS.
Yeah, the Unified.
We're all dealing in a commodity, and it seems like AI processing, automatic processing is going to be very effective in that environment. Does anyone see the need in our market to go somewhat away from the commoditized products?
Yeah, I think, and we're seeing evidence of it. We're talking to CMG about advertising on the podcast. They want to join in, or at least talking about it, with their product. They have a home equity product that's very unique, that's very powerful. Spent time with our folks at Caliber. I was with Danny at the MBA secondary conference. Really interested in what they're doing. And, of course, we've already talked to Angel Oak, and there's a whole bunch of others. I think we're at a point where we're going to be seeing some new product innovation. What are the boundaries of it? We have Alice had to depart from our conversation today. She just notified me, and I saw that she had to leave the conversation, so I'd run out to her. But I think we're going to see more and more evidence of this being the new trend. We're going to see a lot of new innovative new products coming on the market. And we have people we're working with. We're consulting to 2 companies trying to bring some very unique products to market. And so I think the answer is, yeah, we're going to see it. I think when the QM patch goes off and away, that's going to open the door further. A lot of development on that. And then you look at what Mutune's wanting to do and what Calabria talked about in New York 2 weeks ago now at the secondary conference. I think there's more and more evidence that the FHFA wants to invite in more non-conforming and take some of the pressure off of Fannie and Freddie being the only source. Certainly they want some relief at HUD from the standpoint they're going to be the lender of low resort. In other words, we select FHA loans as a bottom part of the market. That's not what they want to be, unless there's other extenuating circumstances. So I think we're going to see more innovation in that, and I think we're going to look at what's going to happen with automation. So that's my 2 cents on that. And looking at the clock, I want to get over to Allen. And Allen, there's so much we could go with this whole area of automation. But you're working on a project that with your primary employer, Fiserv, it is just so fascinating. And you just stood up recently, if I recall, and get into it and explain to the degree that you can, a complete AI engine on standing up. Well, how would I describe it? Is it an AI engine to stand up and take a full application, walk through the process, or how do we best describe that? I'm looking for the right words.
Yeah, no problem. Let's just we'll just go right into it, and we'll make up our own word, just like I said. I think I said digitalness earlier.
Digitalness, yeah, that works. Yeah.
Yeah. So I spent the last year working on 2 really great projects, and for anyone on our podcast listening today or download that joined Fiserv Forum in Las Vegas last month, you probably had the chance to come by and see what we did. But I basically did 2 projects, really like a bake-off, a Coke and Pepsi kind of challenge. And the first was a digital human. So for about a year, I've been working on this project where we've been able to use artificial intelligence, visual emotional intelligence, as well as cognitive learning and all the different fancy words, right, that we keep hearing that everybody's trying to build and create different solutions with. Well, this was a very personalized relationship. It's in an online banking environment, and you basically create a conversation. And the best part about it is we're removing the barrier in this example to getting instant access to rates and fees and affordability. If you remember, and I've said this a couple times on prior podcasts, we just keep stuffing everybody into these digital mortgage platforms, right? We used to have the short form LendingTree app, then we had calculators. Well, now it's give me everything you have. Let me pull all your digital data, and now I'll tell you what rates are going to be. And we've lost that connection to the borrower. And so we've got these great features, but we're not thinking straight all the time. And so what this does is it removes all the barriers, and we have so much information in a personalized banking relationship that we know how much you pay per month. We know how mature your mortgage is. We understand other debts, other liabilities you have. And so we can take you right to affordability and rates. And the best part is it's through a conversation. And so as you're conversing, you may look at a digital human and think, it's kind of digital, it's kind of weird. But once the conversation becomes intelligent and smart, you've gained trust. And once you have trust, now you're having a conversation. It's almost like when you get a new cell phone, right? When you got the smartphone, it took at least 2 weeks to get used to using it. You felt kind of strange and weird. Same thing when people went to the iOS 10 without the button at the bottom center. So anyways, it's like that. Once you build that trust and it's personalized, you have a great conversation. And now you're just communicating, look at these rates. Well, I'd love to see more about that 30-year fix. Did you know, the digital human can say, did you know that we've got outstanding debt we can see? Would you like to look at options to reconsolidate some of that debt? And so it is a guided, actionable conversation. The second project that I worked on was, and that we brought to Forum for folks to see, was a chatbot. Starts out with an SMS experience, quick chats, not a full conversation, one-word answers, and it's integrated to Fiserv's mortgage product called Mortgage Momentum or Mortgage Director. And what it does is you can quickly get access to rates and fees. Again, it's personalized. You're in an online banking environment. But even more important, you can immediately switch over to a live chat window, which is still bot and artificial based. But even more importantly than that, then you get to the next part, which is you have the ability to actually, speak to a live human. So those experiences are things that I think where our industry is going. I don't think it's the end all, and it doesn't answer all of our prayers as to getting people to want to engage with us as lenders. But it's definitely the way that customers are expecting to engage today.
It is so interesting, especially as I read this book. One of my new favorite books is Conversational Marketing. And it is written by the founders of Drift.com, which is a chatbot that we're starting to use just in the infancy on our website. And I look at the power of what these chatbots can do, and that's elementary. That's pretty basic stuff. The amount of work that goes into setting that up is nothing less than amazing. And then I'm also working with a company on Diversified Robotics on creating that digital experience, getting more and more of that covered. And so I'm fascinated with what you have done there. And the emotional intelligence, Allen, is what blew me away. And I saw that at the Fiserv conference last year, what it had been delved. And then what you've done with it since then. What's most interesting, listeners, that I'll share with this. My brother has was a part of a VC firm. They invested in a company that was the imagery. What's the FaceMe.com, Allen? The avatar, there it was. They invested in an avatar company. Yeah. And the emotional intelligence that comes with that. But anyway, what they found in that study was this was 10, 11 years ago, and when they did that study, what would millennials like to talk to most? Now, they were working with what is now becoming the millennial buyer. That was 12 years ago. And they were going through, and they did it in the area of an unwanted pregnancies. And what would a millennial want to talk to? A human that's trained psychologist or an emotionally intelligent avatar? And they were shocked at the result when they said, like 86% want to talk to an emotionally intelligent avatar versus a human. And the number one reason is because of judgment. So I think there's enough people, there's a judgment factor that's out of it. So I think when you look at where this thing is going, as we see advancements, I do believe that we are going to see tremendous advancement. Does that mean we're doing away with the loan originator? No. I'm making these statements I want you to comment on, but we're going to take it to the point where the loan officer, as you said earlier, and the studies are coming out that Glenn said, they want to talk to a human, but it's when they want to talk to him and what stage in the sales funnel. So we have one client that is currently taking their prospects, the people, the borrowers they're working with, through a sales funnel, 2/3 of the way through a sales funnel, Allen, before they even talk to a human. That allows for the human, the loan officer, the mortgage loan originator, to intersect the communication at that point. It's fascinating what's going on. Yeah. And we're getting so short on time, but add to it, and then I want to jump over to Andy because he's got some really good stuff that I want to get into.
Absolutely. I'll leave you with this from the intro of this. One is, a digital worker, whether it is a avatar or it's a chatbot, you have better insights. You can do more than a human can do within that 1 second or that quick conversation, and the information is accurate. It's also, not only is it accurate, but it's repeatable, right? You're always providing the same accurate information, so the experience is the same across all types of conversations. And really today, I think financial institutions in general, David, they're talking more about a financial journey, right? It's not about the transaction, but it's about the experience. And as we start to, I'm not even going to get in right now to omni-channel origination, other topics, but as we think about that journey as a mortgage industry, it sometimes is way beyond mortgage, right? So we have to look at the full financial picture. That's right.
So I've got to interrupt real quickly because Andy Schell, I know you have to run. You just sent me a quick message. We're going to continue the discussion. We're getting so many questions in from listeners. So we're going to continue this hot topic roundtable discussion next week because Andy Schell's got some brilliant comments down and talking about his perspective on things. And so, Andy, do you want to tease it? Do you have time just to tease it just briefly on some of the things we're going to talk about? Because you talked about leadership, strategy, 360 management. I mean, there's so much in your stuff, in your notes here, that we've got to get to it. So we're going to continue this, but do you want to tease it up?
Sure, absolutely. And we can even continue some of what Alan's talking about because I do want to talk about AUS and the autonomous vehicle. So I'll tease that up as one of the points and why it is that we use credit committees to make decisions instead of a single person. But next week, this leadership thing, what does it mean to be successful? What does it look like? How do you know that you're running your company in a way that's going to get you to an outcome that's expected? It's so much about people, and it's so much about how people think, and it's so much about how people think and how they act and how they evaluate alternatives. And this is all about inside people's heads. So we're going to transition away from all about a computer to we're going to next week with my stuff. It's really all about people and how we make decisions and what we do with it and how we inspire people to help our company achieve amazing things.
I cannot wait. I should have anticipated this could be a two-part series, Andy, because there's so much we want to continue on with what you're talking about, Allen, because I think there's so much focus on that. But one thing we're losing sight of is the people and the communication. And I think, how do we integrate those two? And so, folks, thank you for all of your comments that you've sent in here. But let's just run around the horn. Andy gave his thoughts on that. Then we're going to go to Allen and Joe, and we'll hang it. We'll put the pause button on this and pick it up again next week. Allen?
I actually will stop saying things because I'll give Joe the opportunity to talk a little bit. But I agree with everybody's comments. It's a great topic, and it goes in so many different directions.
Joe, you get to close it out. What you got for us?
Well, I'll just say, sounds like you need to tune in next week because it ought to be good.
It is going to be good. I kid you not. And I think it's the balance, folks. What is the relationship between us humans and the developments of computerization? The both are happening. And then throw in the mix to that what's going to happen with Fannie Mae and Freddie Mac. It's going to be interesting. We should have some more data for us next week, so be sure to come back next week as we continue this discussion. Alice, Andy, Allen, and Joe, thanks so much for joining in on what has been such a fun discussion, and we just scratched the surface. So we'll be continuing on next week, and who knows, we may do it a week after that. So we're in control of the show, and we'll look forward to having you back next week. So grateful for our sponsors, Black Knight, Open Mortgage, Finastra, ResX, Warehouse Lending, a division of United Bank. So good to have them as our newest sponsor. The MBA, Lenders One, and the Mortgage Collaborative, the two co-ops in our advertising group, as well as Velma, Knowledge Coop, and Vidyard. Soon going to be talking about AI Assist. That's another one joining us. We've got so much, so be sure to come back to hear us talking about all these important topics next week. Good to have you with us, and have a great week, everybody.
You've been listening to Lykken on Lending, a weekly mortgage market update with your host, David Lykken of Transformational Mortgage Solutions. Join us next week, and thanks for listening.